the Adani issue in Parliament as well being debated, and we'll cut back in as that progresses. But a fair bit of disruption and the proceedings there. The market, by the way, has come back almost to the green. We are down only 7 points, 17,760. It's been that way for almost a fortnight now. Just 60, 70, 80 points. Swings, I mean, these are large swings which happen in a matter of 30, 40 minutes. And I think the same is played out once again on the upside from the lows. Hemang Jani is with us, strategist at Motilal Oswal Financial Services. Hemang, good to have you with us here. Thanks very much for your time. Your thoughts, Hemang, on just two names. One is Tata Steel, which of course is under pressure. And then there is Hindalco, which is also selling off. Of course, both have reported earnings as well. The dollar is higher a little bit. Just your thoughts from here for both these names.
Yeah, good afternoon, Prashant. I think in case of Tata Steel, it was pretty much expected that the Europe numbers will not be that impressive. But I think what disappointed the market was the India standalone EBITDA per ton, and the fact that US we have this inflation print will take about a week's time. We don't have any incremental triggers coming from China side. So given this numbers, the stock may remain slightly subdued. By the way, the con call is underway. It was to start at 2 o'clock. So depending upon what sort of guidance or outlook the management gives for the next quarter, that would be an important monitorable. But given this entire development, the stock may remain subdued. It may not correct much because once you have some positive trigger, typically metal stocks bounce back also equally sharply. So that is as far as Tata Steel is concerned. I think in case of Hindalco, definitely we feel that this Novelis numbers and the aluminium outlook has not been that negative. I think there is an overreaction when it comes to the stock price. And given the strong demand for the auto and the beverage can business which is there, we think that Hindalco should be relatively better placed. So these kind of a deep correction should be used as a buying opportunity. We have a strong buy call on Hindalco with a 20% kind of an upside.
Okay, all right. Well, Hemang, just hold that thought. The problem is with both Hindalco's, Novelis and Tata Steel is, for the next few quarters, things will be weak. In fact, though the con call is going on currently, we are at CNBC-TV18 did have a chance to catch up with Mr. Narendran, and we tried to squeeze out a couple of numbers from him in terms of a guidance on the India EBITDA per ton as well as the Europe EBITDA per ton. Let's hear out what he had to tell us.
So you will see the negative EBITDA that we are seeing in Europe in Q3 reduce in Q4. We are not fully out of the woods yet because the demand in Europe is still a bit fragile.
Hopefully by the first half of FY24, Europe moves into the green.
Absolutely. That's what we hope.
The India EBITDA per ton then from around, this 10,500 rupees per ton, we could add a little bit to that. That would be basically the increased prices of around 1,500 rupees and maybe some cost benefit as well, given that operating leverage will pick up. You have the export market as well. So
Absolutely.
Do we work with the EBITDA per ton in that vicinity of around 12,500 rupees per ton at current reckoning?
I don't want to give you a specific number, but yes, things will certainly improve because the prices are going up and the costs are stable, if not going down. Also keep in mind, Nigel, that Q4 volumes will be higher than Q3 volumes, both in India and in Europe. Despite all these challenges and the bad set of numbers, if you see the debt has stayed where it is at 71,000 crores, it has not gone up. This year, obviously, we also had to contend with the 12,000 crore acquisition of Nilachal, plus a lot of money which got stuck in working capital because of high input costs as well as the stock buildup in Netherlands. So we'll be releasing that cash for next year. Obviously, next year is a year when we'll get back on track and we want to continue with our focus on debt reduction.
Three big numbers coming out of there. The EBITDA per ton in Europe, but it'll come down to around $50 per ton in terms of a loss and a couple of more quarters of pain before they move back into the green. For the India business, from around 10,500 rupees, it could potentially go to around 12,500 rupees. And no big debt reduction is what we could see in FY23, but in FY24, $1 billion is the run rate they would like to go with. From the old economy, though, let's talk about some new age stocks. Paytm is buzzing and trained. Abhishek is with us to tell us what's aiding that rally. Abhishek.
Well, the company did have a con call in which the key highlights are that they expect the long-term payment process margins to stabilize around 5 to 7 basis points. So they see massive growth in subscription business, and there is massive opportunity in that segment for the company going ahead as well. The device run rate is about 30,000 every month, which is expected to improve further as and when the headcount actually increases for the company. So the financial services revenue now contributes about 22% of the overall revenue and is expected to improve going ahead as well. The guidance for lending business is that it will have a growth of 20 to 30% on a quarter-on-quarter basis. So it's on a sequential basis that they will see a growth of 20 to 30% over there. The company is planning to launch a UPI Lite app which will allow instant small value UPI transactions to take place. So there is potential for 10 crore merchants as well as 50 crore payment customers in the near term as well. We also have another development which has taken place. Now, industry sources have told CNBC-TV18 that MEITY is likely to send a list of digital lenders to be removed from the Play Store and Google as well. So they have recently blocked about 138 betting and 94 loan apps with China links for their alleged involvement in money laundering. So both these two developments have been working in favor of Paytm in trade today. Back to you.
Okay, got that. Thanks very much for the details, Abhishek. By the way, while we talk about Paytm, don't lose sight of banks and what banks are doing. There's a dramatic recovery underway on the Bank Nifty. Recovery would be a mild word, actually. Now the Bank Nifty is leading the charge, and there's a significant amount of traction, days high on that index. And it's pretty much all the biggies that are lined up on top. Look at Kotak or IndusInd for that matter. Even SBI is now positive, about 0.5% higher. So very interesting moves in Bank Nifty. By the way, Fitch issued a statement a couple of minutes back as well. Again, pretty much reiterating that as of now, they don't see any immediate threat to the banking system or bank ratings because of the Adani exposure that some of these lenders have. So more reassuring statements coming in from some of the rating agencies.
Today is also the Bank Nifty weekly options
expiry. Yeah. So
right?
I guess some of that impact is sort of beginning to
play out.
Yeah. So let's take the conversation to Hemang Jani. Hemang, thanks for being with us this afternoon. I do want to get your thoughts in on Paytm. I don't know if you could hear much of what Abhishek was saying, but the street seems to be impressed that however it's happened, it's profitability at least at the EBITDA front, and that's happened ahead of schedule. Your thoughts on the stock?
So, Surbhi, I think a lot of positive in terms of the operating parameters that one is tracking, and most importantly, this operating profitability being reached much ahead of the guidance is definitely going to be viewed positively. Also, if you look at the the indications from the management in terms of focus on the subscription paying merchants, the lending business guidance of 20 to 30%. I think all this is definitely adding up, and this is happening at a time when the majority of the selling, has already happened. So I think the stock should stabilize. It's kind of providing good, 10-15% kind of a move. So from a retail client perspective, I think it opens up good opportunity, for short-term trading.
Hemang, out of time. Thank you very much for joining in. We need to slip into a very short break. On the other side, we'll also be joined by the management of Motherson Sumi Wiring India to discuss their Q3 numbers and the way forward.